You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. The pair that I want to speak about into this video is EUR-JPY. Why do I want to do that? Because we are quite near for the creation of a nice trading opportunity on it. So I want to show you where we can be looking for this potential setup. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds, so the non-commercials in the market, which are the biggest speculators, are doing in the market. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup here on EUR-JPY. Now, starting from the monthly time frame, what we can see is that this market has just provided a very strong impulse to the upside, followed by the correction, and the market has also now printed a very strong continuation to the upside. Now, generally speaking, if you see an impulse like this with extremely strong bullish momentum, we can expect a bullish momentum to continue until we will see the market start a potential rejection. So potentially a long wick and the market rejecting the zone to the downside. And at the moment, we still don't see that. And there is definitely the possibility to see the current trading month that we are just started trading in create a continuation to the upside by basically continuing to show this bullish momentum that the market has here on the monthly time frame. Going down on the weekly, what we can see is that we have just broken above the previous weekly high. In fact, this zone was acting as weekly resistance here. The market started to move to the downside. Again, here the market tested and rejected the zone to the downside. However, we can see how the market here has just created a very strong move to the upside, breaking above this previous resistance. Now, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. So we have the possibility to go for a retest of this previous resistance turn support before a potential continuation to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have a perfect 0.618, so golden ratio retracement, lining up exactly at this previous resistance turn support, creating a confluence of support at this area that we definitely do expect the market to go and test before a potential rejection to the upside. So here on the weekly, everything seems quite bullish, and we do expect the market to provide a correction to this zone before the continuation to the upside. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily, we can see how the market has just provided a very strong impulse to the upside. Now, generally speaking, after the creation of an impulse, you do expect the market to provide a correction before the continuation to the upside. However, in this specific case, we can see that in creating this move to the downside, the market has also just started creating a nice M pattern. And as you know, by definition, after an M pattern, you do expect the market to provide a move to the upside to complete the pattern itself at the previous support turned resistance. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have a perfect 0.618 Fibonacci retracement, which is exactly the zone that we have already identified on the weekly time frame, which is lining up here, meaning that if this market here on the daily time frame will actually manage to provide a deeper correction to this zone, we will have a very nice M pattern on the daily time frame. On the weekly, we are already bullish, and on the monthly, we already have a bullish momentum, meaning that we have a quite high probability for a reversal from this zone and a move to the upside to complete the pattern at this level. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds are doing in the market, we can see that with the last reports, net positions have been increasing. In fact, we went from having 66.8k net positions all the way up to having 80.9k net positions with 200k long positions and a 119k shorts from an institutional perspective. So the euro is getting quite strong, and also 3.2k longs added with the last report alone. And if we go and see what we have on the JPY, we can see how net positions dropped from 50.5k all the way down to minus 48k. So we went from having more longs than shorts from an institutional perspective to having more shorts than longs. So we have a weak JPY and a strong euro, meaning that if euro JPY will actually create a move lower, not only we have perfect conditions from a technical perspective for a high probability longing opportunity, but also from a COT perspective, this is aligning perfectly, because if you have a strong currency against a weak currency, you expect a move to the upside. So if the market will complete this M pattern, we have high probability for a reversal to the upside. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding EUR/JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.